Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, February 2nd, 5:27 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend for 3+ months now. You can see the trend gauge over here, market leadership, flashing the green arrow. All 5 of the major indexes trending above their short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average, except small caps could not get back above their 21-day moving average today. And the reason for that was a hot jobs report that sent rates higher. High interest rates are the enemy of small caps, especially small cap growth. They lagged today. Let's get right into what just happened. So after hours last night, market had a big jump up on earnings primarily from Amazon and even more so Meta. Apple was down slightly on earnings, but we were getting a big pop up. Going into this morning, overnight, that strong open was still there. We were looking at about a 0.6% gap up on the S&P and over 1% on the NASDAQ 100 until 8:30 a.m. Eastern time, when the jobs report came out, and it was much stronger than was expected. That sent the futures down to flat on the S&P 500, and it sent interest rates spiking higher. By the time we opened, we were opened about 0.2% up on the S&P, about 0.5% up on the NASDAQ 100, and down 1.4% on small caps. That divergence continued throughout the day. However, we did have very strong recovery, but it was narrow. It was led by AI and AI infrastructure, AI data center plays. Breadth was negative, 60% down volume on the day. Small caps lagged all day, although they did cut into those opening losses. Here are the final numbers. The Big Seven, this is not a misprint, up an average of 4.99%, led by Meta up 20%, Amazon up 7.9%. Apple recovered to just be down about 0.5% after being down over 3%. RG8 up 0.6%, S&P 500 up 1.07%, but the equal weight S&P negative by 0.1%. NASDAQ 100 up 1.69, equal weight up only 0.35. Dow also up 0.35. Mid caps basically flat, small caps down 0.6. Global 60/40 basically flat. In-house GROTECTION up 1.52%. I can't emphasize enough that the strength today was really focused on anything that had to do with AI and AI infrastructure. And the reason for that was in the conference calls after hours, Amazon specifically had a big jump up in their web services, and they talked about how they were going to have to invest more in their infrastructure to keep up with the AI demand. And that's been a theme all throughout earnings, big tech earnings, as they've been reported over the last few weeks. And so anything really related to AI, whether it's software or infrastructure, led the way today. And we'll dig into that a little bit more when we get into the charts, which we'll start right about now. So here's the S&P 500. Let's go to a 5-minute. You can see we started this 5-minute strong trend up late yesterday morning, continued it. Despite we were going to open up right around here, up 0.6%, instead opened up 0.2, but recovered it quickly. 3-hour trend up. One harsh attempt to sell it off at 12:45 was quickly bought up right at 49.40. Another 3-hour trend up into the last hour or so just faded with some profit taking into the close. big win for the bulls, but it's a win for only specific bulls. Let's take a look at RSP very quickly. This is the equal weighted, not breaking away the way the S&P 500 did, acting fine relative to the 21-day moving average, and we are watching that closely. This was one of the reasons why we did some offensive selling today, as well as taking advantage of that pop, the drop, I should say, on the futures to get out of our NASDAQ 100 hedge that we had on going into earnings last night. So we were able to cut that loss to a very manageable 0.2% of AUM by the time we opened today. Let's go to the NASDAQ 100. Note it did poke its head above a high, and it did make a new closing high. Was rejected at this 430 level, right where it was the middle of last week. This is the reason we had that hedge on. You can see the underperformance, especially the Tuesday after hours earnings reports, had the NASDAQ 100 starting to lag late last week, continuing to lag into the beginning of this week. That all changed with the reports after hours on Thursday. NASDAQ 100 all-time high close, as well as with the S&P 500. Dow Jones Industrial Average just trugging higher, not causing anybody any heartache unless you look at relative strength, and you can see that it's not been confirmed by the new highs, but this is a more defensive index. Let's go to mid caps. They managed to close basically flat on the day. And let me point out MDYG mid cap growth at highs relative to what it's been doing over the last 6 or 7 weeks. Back to small caps. Could not get back above the 21-day moving average, closing right below it, holding this 10-week/50-day moving average. So that's a positive, but it's kind of holding on by a thread. So this week we had higher interest rates. Today we had a contagion. Let's look at NYCB. Earlier this week, New York Community Bank really hasn't recovered much, up 5% today after this 30+% drop. On fears of bad debts that are on their balance sheet after they absorbed some of those troubled banks earlier this year. So there was a lot of crosswinds in the market. By the end of the week, it was a win for the bulls, certainly a win for the NASDAQ 100, not so much for the broader market like the RSP. What did that end up doing for the week? Up 0.41% versus the NASDAQ 100. For the week, up 1.23%. The S&P 500 up 1.38%. Let me also get this out of the way so you can see I've got the weekly charts back here. So anything that we bring up, you can also see the weekly performance in the last 3 months or so of action. So let's go through this once again very quickly. IWM small caps. For the week, down 0.80%. So you can see here, really all it is after an outsized move up late last year, still consolidating. If this breaks higher, this is going to be really good for stocks in general. On the downside, we just finished the most bullish 3-4 months of the year. February is one of the 2 worst months, so we are cognizant of that, because one of the reasons we're cognizant of it is because seasonality has really been following the historical guidelines over the last year, certainly year plus, really. So it is something that we're aware of. One more reason why we did a little bit of offensive selling today. Plus the S&P got to that 5% above its 50-day moving average level on the daily chart too, right into the close. Near the close is when we took out. We have been overweight on SSO, and we hit 50% gains on SPXL from this nice move up back since the follow-through day. We've got SPXL and SSO. We've been overweight on the S&P 500, and we led by tech, and we took 25% of the SSO off. So we're back to our normal 0.6 allocation in a healthy market. Our average allocation to S&P 500 is a beta of 0.6, which we get there by using not 60% of our capital. We use index ETFs and leveraged index ETFs to get that, and then invest the difference in either T-bills or other names. So that's a look at the major indexes. Let's take a look at the VIX. Not much to really say here. VIX down mildly, still above the 50 and 21-day moving average, but below the 200-day moving average, and this is kind of coiling. The dollar was strong today. This started after the strong jobs report came out. You can see big move up on the dollar, up 0.89%. This strong dollar hammered gold and silver stocks. Gold down 1%. Gold stocks, which looked like they were trying to come off a bottom with a nice day on Thursday, down 3.5%. Terrible there. Bitcoin, nice consolidation over the last 3 days after this gap up. Getting kind of attractive. We've got an alert over today's highs that'll carry it above the 50-day moving average and the 21-day moving average. We won't be actually buying BITO. We'll be buying IBIT, our preferred spot Bitcoin ETF. On to bonds now. BND, big gap down in price because we got a big move up in rates. And again, this was on the jobs report. Maybe Jerome Powell knew about the jobs report on Wednesday when he had his press conference and took the March cuts basically off the board. We will never really know for sure, but the bottom line is that the March cuts went way down. The chance of March cuts went way down today with that strong jobs report. TLT down 2.21%. The 30-year bond conversely up over 3%. 10-year bond TNX up 4.4%. Big move there. All right, that's all our inter-asset correlation. Let's get to the tail of the tape. I do want to point out sentiment increased with the readings this week. AAII bulls up by 10 to 49.3. Bears only dropped by 2 to 24.5. Magic number that we look for here is bulls minus bears. If that equals 32, that's a red flag. It's not necessarily that one gets, we want both of them to be at extremes. That's something I read on the internet. I wish I could flag the source, but all I did is take notes for it. But it is something that we're aware of. NAAIM, 87%. If this gets to 100, that's a negative sentiment indicator. So there's the NFP, and additionally, average hourly worked was much higher. That's inflationary. So that's not good either. On the plus side, consumer confidence hit a 30-month high. That came out at 10 o'clock Eastern time. So the day count up to second day above the ADMA, 20th above the 21-day. I talked about the trend all day. Really, only thing strong, the dollar and tech. On the downside, ITB, although it came off the lows, that's home builders, uranium, oil, services and producers, and then a whole slew of sectors, basic materials, staples, utilities, healthcare, and real estate, and gold and silver stocks to the downside. As I mentioned, we took that SQQQ hedge off pre-market, and then going into the close, trimmed some SSO. The net of that was to raise our beta to a 1.41. Bottom line for the day, AI infrastructure, data center, however you want to put it, leads the S&P and the NASDAQ 100 up to new highs. Small caps weak, however, as well as breadth. So we'll be keeping an eye on that going into next week. Let's take a look at some AI-related charts that really kicked butt today. And we'll start off with one that's not related to AI, but Deckers. On the back of their Hoka and UGG products, up 14% to new all-time highs, bounced or pulled back right when it reached that 100 level. Great reaction there. Here's the meta chart. Gap up, closed near the top of the range. Here's the Amazon chart. Closed near the top of the range, up 7.9%. And this 170 area, this is still not a new high. Amazon has room to run all the way back here in 2021. The high was around 190. So room to run there just from a all-time high standpoint on Amazon. Now, some of the infrastructure AI-related plays that had a great day today. Let's start with Snow, which we got stopped out of earlier this week. This is an AI software play, up 9%. Datadog also got stopped on this, up 5.8%. Our two big positions that we have that benefited, NVIDIA up 5%. AMD, not as big a position, but between the two of them, Semiconductors overall are our largest position. AMD up 4%. NXT, this was the solar stock, added on some gains to making a day two higher high after its gap up, getting no help from the overall sector. However, as TAN it made a lower close relative to the last couple of weeks, down 2.6%. Some other infrastructure plays that have great looking charts and continue to move higher: VRT, ANET. This is a network play. ESTC, a software play, making new all-time highs. Oh, let's take a look. I think that covers just about everything that I wanted to show. NET, NET, also with a good day, but this isn't as big a leader, but still a nice gain on the day. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. My partner, Dan Stewart, if you're interested in becoming a client, dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Make sure you check out our podcast. It's already out there on YouTube. If you're on the email list, a link will be mailed out in the morning. A lot of good stuff on there. Just one of our better podcasts. A lot of good content on there. Our flagship portfolio is named GROTECTION because that's what we do at Revere. We grow assets when the market's in an uptrend and protect them when it's in a downtrend. We're still in growth mode, riding this wave since the beginning of November. And that's how we do things here. We can recognize the difference between an unhealthy market and a strong market, and we play that accordingly. And with that, we'll wrap it up for the week ending February 2nd, 2024. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great weekend.